Why do people in the US borrow smart money? Well, maybe it's because here in the US, your credit score can be impacted for better or worse depending on how much and how often you borrow and repay the money you borrow. Or maybe it's because over the course of a year, you could pay thousands of dollars more in interest and fees on your loan if you don't shop around for the best deal. So whether you're borrowing money to buy a home or a car, consolidate debt, or fund an unexpected expense, you want to borrow smart. And here are 6 mistakes to avoid. Mistake number 1, not comparing APRs and total cost. When you're approved for a loan, you may automatically assume that the lender with the lowest APR is the best option. However, the lender with the lowest APR may charge other fees that make them more expensive than the lender with the higher APR. That's why it's important to compare the APR and total cost of the loan from different lenders before signing on the dotted line. Mistake number 2, ignoring fees. Now, we already mentioned this, but it bears repeating. Don't ignore fees such as origination fees, prepayment fees, and late fees when determining the true cost of your loan. Origination fees are fees that are charged by the lender for processing your loan. Prepayment fees are fees that are charged by the lender if you pay off your loan early. Late fees are fees that are charged by the lender if you make late payments on your loan. And all of these fees can add up and end up costing you thousands of dollars over the life of your loan. Mistake number 3, choosing a variable rate without a buffer. When interest rates are rising, it may be tempting to choose a variable interest rate or a teaser rate, especially if it comes with a low introductory period. However, if interest rates continue to rise after the introductory period ends, your monthly payments could increase significantly. That's why it's important to choose a fixed interest rate if you can afford it, or choose a variable rate with a buffer that gives you some wiggle room in case interest rates rise. Mistake number 4, payday or auto title loans. These types of loans are like a quick fix that can seem like a lifesaver when you need money fast, but they can be a real trap. Payday loans typically have very high interest rates and fees. Auto title loans can result in you losing your car if you can't keep up with the payments, and both types of loans can quickly get you into a cycle of debt that's hard to escape. Mistake number 5, balloon payments. Now, balloon payment loans may seem like a good option because they typically have lower initial payments than traditional loans. But as the name suggests, they have a big balloon payment at the end of the loan term that can be difficult to afford. Mistake number 6, not understanding teaser rates. Teaser rates are introductory rates that are usually lower than the market rate, and they are offered to attract borrowers. However, they're only temporary, and once the teaser period ends, your interest rate will jump to the lender's standard rate, which may be much higher. That's why it's important to understand the terms of the loan before you commit to it. Mistake number 7, overlooking your credit score and hard inquiries. Your credit score is a major factor in determining your eligibility for a loan and the interest rate that you'll be charged. Lenders use your credit score to assess your creditworthiness and the likelihood that you'll repay the loan. That's why it's important to check your credit report before applying for a loan so you can see where you stand and take steps to improve your score if necessary. Additionally, each time you apply for a loan, a hard inquiry is placed on your credit report, which can temporarily lower your credit score. Too many hard inquiries in a short period of time can make it difficult to qualify for a loan. Now let's talk about the climax, the fix. Before you sign on the dotted line, be sure to. Thank you for watching this episode of Money Smart. To find more resources and check out our full library of videos, visit our website,